Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar demand strengthened Thursday and into Friday and now pushing higher towards the level of 66.1025 for its next contest as another negative session for the US dollar index tumbles further to 105.28. From the weakness of the greenback, it prompted the move through the 60-day moving average around the level of 65.3545 and now sets the scene for further gains as traders now brace for April's non-farm payroll report, which is expected to rise by approximately 240,000 jobs added, which is slightly lower than March's figure of 303,000. Any pullback on the day expects to see demand around 65.45. Moving on to the euro, the market has posted a dragonfly doji, which is bullish and therefore could see further gains, as we can see the whole pattern forming into a stronger bias with the RSI and the MACD married together and a slight weak bull trend coming with the ADX. This has given further indication that we could see a move to 107.60 and the target still holding for this week into next at 108.2025. Any pullback is likely to be shallow and support seen around 106.65. The Japanese yen now into the third consecutive day strengthened significantly since the rumours that the Bank of Japan may have intervened, and given by this large candle does question. Nevertheless, from a technical point, we are breaking down since we've taken out the level of 155.5 and exposes the next region coming in at 151.4585. Now, I have mentioned before the target could be lower around the region of 150.5, so let's see if the bears can weigh on this support and expose the next two levels, that is at 151.5 to 150.5. With any upside attempts, I still view no clear assessment. However, 156 figure 20 may serve as a short-term cap. A dragonfly doji posted for sterling gives us further indication, along with the technicals, that the market can extend and retake the upside towards 125.70 to 126.2035. Reassess from that level, with any pullback expected to see the support around 125 figure. Pattern slowly unfolds again back to a bearish stance for gold as the market tumbles back to 2,300. In light of how the assessment is to a bearish case, could see further moves towards 2,278 and a target or a base around 2,254 to 58. With any upside attempts, it expects to see a cap around 2,322 to 25. Wrapping up with oil, was since taking out that level of $80 a barrel, the support or next key level is seen at 78.55. Now a break there would give further scope to the downside and bring in a target roughly around 75.5 and reassess from there. Any renewed upside attempts should be limited. And given that we've got a strong bear trend from the ADX and the technicals are negative, but we are oversold from the RSI, still nevertheless should weigh on the support. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the start to the new weekend.